Welcome back to the $25 Investor, the channel that proves you do not need to be rich to start building wealth. You just need consistency, discipline, and time. Today, we are talking about a company built by one of the greatest investors in history, Warren Buffett. Warren Buffett is often called the Oracle of Omaha. He turned a struggling textile business into one of the most powerful conglomerates in the world, Berkshire Hathaway. Over decades, he focused on buying strong businesses, holding them long-term, and letting compounding do the heavy lifting. And here is the powerful part. Buffett did not rely on gambling. He did not rely on hype. He relied on discipline, patience, and reinvestment. That is exactly what this channel is about. What if you followed a similar mindset, not with millions of dollars, but with just $25 per week? $25 per week equals $1,300 per year. That may not sound life-changing today, but when that money is invested into a company built on Buffett's principles of value investing, strong cash flow, and long-term growth, the results over 10, 20, or 30 years can be extraordinary. Buffett once said that the stock market is a device for transferring money from the impatient to the patient. On this channel, we choose patience. Today, we will break down how investing just $25 per week into Berkshire Hathaway Class B shares, ticker symbol BRK.B, could potentially grow into hundreds of thousands of dollars over time. If you have ever wondered how small money can become big money, this video is for you. Now let us break this down step by step so you clearly understand what it means to invest $25 per week into Berkshire Hathaway BRK.B. BRK.B represents Class B shares of Berkshire Hathaway. These shares were specifically created to allow everyday investors to participate in the company without needing hundreds of thousands of dollars to buy the original Class A shares. When you purchase one share of Berkshire Hathaway, you are not just buying one business. You are buying ownership in a massive diversified conglomerate that includes insurance companies such as GEICO, BNSF Railway, one of the largest freight rail networks in North America, energy utilities serving millions of customers, and manufacturing and consumer product businesses, large equity holdings in major publicly traded companies. So instead of picking individual stocks, you are essentially investing in a professionally managed collection of high-quality businesses under one umbrella. Now let us focus on the math of $25 per week. $25 per week equals $1,300 per year. If you invest consistently, after 5 years, you will have invested $6,500. After 10 years, you will have invested $13,000. After 20 years, you will have invested $26,000. After 30 years, you will have invested $39,000. At first glance, these numbers may not seem dramatic, but the key concept is compounding growth. When you invest weekly, you are practicing what is called dollar cost averaging. This means you buy shares regularly regardless of whether the price is up or down. Over time, this strategy reduces emotional investing and builds a steady accumulation of shares. As Berkshire Hathaway grows its earnings and reinvests profits into new businesses, your ownership stake grows in value. That is where the exponential effect begins. The power here is not the $25. The power is the combination of consistency, time, compounding, and strong business fundamentals. This is how small weekly investments can turn into meaningful long-term wealth. BRK.B represents Class B shares of Berkshire Hathaway, the multinational conglomerate. Led for decades by legendary investor Warren Buffett, Berkshire Hathaway is not just one company. It owns or holds major stakes in dozens of businesses. It fully owns companies like GEICO Insurance and BNSF Railway. It also holds large investments in publicly traded companies such as Apple, Coca-Cola, Bank of America, and American Express. This structure makes Berkshire similar to a diversified investment fund, but with active capital allocation led by experienced management. Instead of buying one single business, you are buying a portfolio of operating companies and stock holdings. So why is this important? Let's break down the 3 key reasons. First, diversification reduces risk. Berkshire operates in insurance, energy, transportation, consumer goods, and technology. That spreads exposure across multiple sectors. Second, disciplined capital allocation. Historically, Berkshire has reinvested profits into high-quality businesses rather than paying large dividends. Third, long-term focus. The company emphasizes intrinsic value and long-term ownership, not short-term speculation. This makes Berkshire Hathaway BRK.B attractive for investors who want broad exposure with strong management and a long-term mindset. Now let us compare Berkshire BRK.B to the broader market, represented by the S&P 500 index through SPY. SPI 3-year growth rate is 20%. SPI 5-year growth rate is 13.65%. SPI 10-year growth rate is 15.72%. Berkshire BRK.B 3-year growth rate is 24.88%. Berkshire BRK.B 5-year growth rate is 18.33%. Berkshire BRK.B 10-year growth rate is 15.1%. Over 3 years, Berkshire BRK.B outperformed SPY by nearly 5 percentage points. Over 5 years, it outperformed by more than 4 percentage points. Over 10 years, performance is very close, with SPY slightly ahead. What does this tell us? In the short to medium term, Berkshire has demonstrated strong performance compared to the broader index. Over the long term, both have delivered mid-teen annualized returns. That level of performance, sustained over decades, is extremely powerful when combined with consistent weekly investing. Before we dive into the specific investment projections, please remember, this video is for educational and informational purposes only. It is not financial advice. I am not a financial advisor. The examples and projections shared here are based on historical data and mathematical compounding models, which are used to illustrate potential outcomes. Investing in the stock market involves risk, including the loss of principal. Past performance is never a guarantee of future results. Always conduct your own thorough research or consult with a qualified, licensed financial professional before making any investment decisions for your personal portfolio. Now let us slow down and really understand these growth numbers, because this is where long-term wealth is built. BRK.B 3-year growth rate is 24.88%, 5-year growth rate is 18.33%, 10-year growth rate is 15.1%. At first glance, these numbers may just look like percentages, but when you understand what they represent, they become extremely powerful. A 3-year growth rate of 24.88% means that on average, the stock delivered nearly 25% per year during that period. That is a very strong short-term performance. For comparison, many professional investors consider 10% per year to be a solid long-term return. So nearly 25% annually over 3 years shows strong business momentum and capital appreciation. The 5-year growth rate of 18.33% is even more meaningful. 5 years is long enough to include different market conditions, bull markets, pullbacks, volatility, and economic uncertainty. Maintaining over 18% annual growth across 5 years suggests resilience and strong underlying business performance. Now look at the 10-year growth rate, 15.1% annually. This number is extremely important. Why? Because 10 years smooths out short-term market noise. Over a full decade, markets go through expansions, corrections, interest rate changes, inflation cycles, and geopolitical events. Delivering over 15% annualized growth across 10 years shows long-term compounding strength. Let us put 15% annual growth into perspective. If you invest $10,000 at 15% annually and leave it untouched, after 10 years, it more than quadruples. After 20 years, it multiplies many times over. After 30 years, it becomes life-changing. And remember, these returns compound. That means each year's gains begin earning their own gains. The longer the timeline, the more powerful this effect becomes. What makes Berkshire Hathaway unique is that it does not focus on flashy, short-term growth. Instead, it focuses on owning strong businesses, generating cash flow, and allocating capital efficiently. Under the long-term leadership of Warren Buffett, the company has emphasized discipline, patience, and reinvestment. That strategy shows up in these growth rates. The 3-year number shows strength, the 5-year number shows consistency, the 10-year number shows durability. For a long-term investor who is contributing weekly, especially someone investing $25 per week, durability is what matters most. You want a company that can perform across cycles, not just during good times. When you combine a 15% long-term growth rate with consistent weekly investing, you are creating a powerful engine. The growth rate is the fuel, time is the accelerator, consistency is the steering wheel, and that is how small weekly investments can turn into large long-term results. Now let us slow this down and clearly understand the foundation of everything, your capital contribution. When you invest $25 per week, you are investing. $25 multiplied by 52 weeks equals $1,300 per year. This is not a random number. It is systematic, it is automatic, it is repeatable. Now let us look at how that builds over time purely from your own money, without even including growth yet. After 1 year, you have invested $1,300. This is your starting base. Small but powerful because it represents discipline. After 5 years, $1,300 per year multiplied by 5 years equals $6,500 invested. After 10 years, $1,300 multiplied by 10 years equals $13,000 invested. After 15 years, you have invested $19,500. After 20 years, you have invested $26,000. After 25 years, you have invested $32,500. After 30 years, you have invested $39,000. Notice something very important here. There is no magic, no guessing, no market timing, just consistency. Now here's the powerful realization. $39,000 over 30 years might not sound life-changing by itself. But remember, this is only your contribution. This is only the fuel you are putting into the engine. The real acceleration happens when growth and compounding sit on top of this steady contribution. But before we even talk about returns, understand this. Most people say they cannot invest because they do not have a large amount of money. Yet over 30 years, just $25 a week becomes nearly $40,000 of capital. That means wealth building is not about large starting amounts. It is about time and consistency. If you can build this straight line of contributions, the market can potentially build the curve above it. This straight line is your control. The curve is what compounding adds. And that is why Section 7 is so important. Because before you ever talk about returns, you must first build the habit of consistent capital deployment. $25 every week, no excuses, 30 years. That is how the foundation of wealth begins. At 5 years, you invested $6,500. Your portfolio grows to $9,109. That means over $2,600 in growth beyond contributions. At 10 years, $13,000 invested grows to $26,484. Your money has more than doubled. At 15 years, $19,500 invested grows to $57,715. Growth now exceeds total contributions. At 20 years, $26,000 invested grows to $102,839. At 25 years, $32,500 invested grows to $165,495. At 30 years, approximately $50,900 invested grows to $260,609. This is compound growth in action. Now let us double the contribution from $25 to $50 per week. $50 multiplied by 52 weeks equals $2,600 per year. After 5 years, you have invested $13,000. Your portfolio grows to $18,218. Notice something important here. You invested $13,000, but your portfolio is worth over $18,000. That means more than $5,000 came from growth alone. That is compounding beginning to work. After 10 years, you have invested $26,000. Your portfolio grows to $52,968. At this point, your money has more than doubled compared to your total contributions. Growth is now doing as much work as you are. After 15 years, you have invested $39,000. Your portfolio grows to $115,430. Now your growth is far greater than your contributions. The snowball is rolling faster. After 20 years, you have invested $52,000. Your portfolio grows to $205,679. You contributed $52,000, but growth added over $150,000. After 25 years, $65,000 invested grows to $330,990. After 30 years, approximately $89,750 invested grows to $520,421. Doubling your weekly investment does not just double your outcome. Over time, compounding magnifies the difference dramatically. Now, let us increase the weekly contribution to $100. $100 multiplied by 52 weeks equals $5,200 per year. After 5 years, you have invested $26,000. Your portfolio grows to $36,436. After 10 years, $52,000 invested grows to $105,937. At 10 years, growth alone has added more than $53,000. After 15 years, $78,000 invested grows to $230,861. Growth has nearly tripled your invested capital. After 20 years, $104,000 invested grows to $411,359. After 25 years, $130,000 invested grows to $661,980. After 30 years, approximately $167,450 invested grows to $1,040,044. This is the power of consistent six-figure investing outcomes built from $100 per week. Now let us move to $150 per week. $150 multiplied by 52 weeks equals $7,800 per year. After 5 years, $39,000 invested grows to $54,655. After 10 years, $78,000 invested grows to $158,905. After 15 years, $117,000 invested grows to $346,291. After 25 years, $195,000 invested grows to $992,971. After 30 years, approximately $245,150 invested grows to $1,559,667. You are now well into millionaire territory simply by maintaining disciplined contributions. $250 per week equals $13,000 per year. After 5 years, $65,000 invested grows to $91,092. After 10 years, $130,000 invested grows to $264,842. After 15 years, $195,000 invested grows to $577,152. After 20 years, $260,000 invested grows to $1,028,399. After 25 years, $325,000 invested grows to $1,654,951. After 30 years, approximately $400,550 invested grows to $2,598,912. You are now approaching $3 million from steady, disciplined investing. Finally, let us examine $300 per week. $300 multiplied by 52 weeks equals $15,600 per year. After 5 years, $78,000 invested grows to $109,310. After 10 years, $156,000 invested grows to $317,811. After 15 years, $234,000 invested grows to $692,583. After 20 years, $312,000 invested grows to $1,234,079. After 25 years, $390,000 invested grows to $1,985,942. After 30 years, approximately $478,250 invested grows to $3,118,535. This clearly demonstrates one core principle. The combination of time, growth rate, and disciplined weekly investing can transform modest weekly amounts into life-changing wealth. The higher the weekly contribution, the more dramatically compounding works in your favor over long time horizons. Now let us bring everything together. Throughout this video, we walked step by step through real numbers using Berkshire Hathaway Class B shares, also known as BRK.B. We did not rely on hype, we did not rely on speculation. We relied on historical growth rates and consistent weekly investing. Here is the most important lesson. Wealth is not built by one large investment. It is built by small investments made consistently over a long period of time. $25 per week equals $1,300 per year. Over 30 years, that equals $39,000 contributed. On its own, that may not sound life-changing. But when you combine that consistency with a long-term growth rate like 15% annually over 10 years, something powerful happens. Compounding begins to take over. In the early years, you are doing most of the work. Your contributions are larger than the growth. But somewhere between year 10 and year 15, the numbers begin to shift. Growth starts adding more than you are contributing. By year 20, growth becomes the dominant force. By year 30, compounding is doing the heavy lifting. That is when time becomes your greatest financial asset. We also saw how increasing your weekly investment dramatically changes the outcome. $50 per week can grow into over $500,000. $100 per week can cross $1 million. $200 per week can exceed $2 million. $300 per week can potentially grow past $3 million over 30 years. The difference is not complexity, the strategy remains the same. The difference is consistency, time horizon, and contribution size. Now remember, no investment is guaranteed. Markets fluctuate, there will be recessions, there will be volatility. Even a company as historically strong as Berkshire Hathaway, led for decades by Warren Buffett, experiences market cycles. But long-term investors who stay disciplined through those cycles are often rewarded. The goal is not to get rich next month. The goal is to build financial freedom over decades. If you start today with $25 per week, you are not just investing money. You are investing in a habit. You are building financial discipline. You are training yourself to think long-term. And that mindset is what truly builds wealth. In the next video, we will explore other ETFs such as QQQ, SPY, VOO, VIG, VGT, and SMH. We will compare their growth rates side by side and see which long-term strategy could potentially turn $25 per week into financial independence. If you found value in this breakdown, please like and subscribe to the $25 Investor. This channel is dedicated to showing how small, consistent investments can create large, life-changing results over time. Remember, start small, stay consistent, think long-term, let compounding work for you. Thank you for watching, and I will see you in the next video.
Welcome to $25 Investor, the channel that proves you don't need to be rich to build wealth. If you can invest just $25 a week, I'll show you how consistency and time can turn small money into long-term financial freedom. Let's get started.